When clients come to us, I actually tell them that for you to become a client, we need three things from you. You need to have a long-term time horizon. You need to buy into our philosophy. In other words, what we do has to be aligning with what you want money managers to do for you. And number three, unlike a relationship with other firms, this one comes with homework. When you build a company, some people are motivated to build the biggest company they can. When your company is little, you want it to become bigger so you can have enough money to pay employees and to be able to pay your bills. But as the company grew larger, I realized that I really don't care about building the largest company possible. What I really wanted to do, I wanted to build a company for which I would be proud of, where a company would be making a difference. And in all honesty, if IMA manages $1 billion or $100 billion, it would make very little difference in my life. In other words, my shopping habits, my daily habits would not really be much, the things I do every day would not be much different. So once you take the money out of the equation, then you just start focusing on what does it mean to be a great firm. And to me, great firm size has absolutely nothing to do with that. Above a certain level, size is really relevant. And what I really wanted IMA to do is I want us to do a great job for our clients. I want us to have the right clients. In fact, to do a good job for clients, we need to have the right clients, because clients have to be happy with what we're doing for them. And therefore, they have to be the right fit for us. That also means that we have to become very picky about clients we take on. When clients come to us, I actually tell them that for you to become a client, we need three things from you. You need to have a long-term time horizon. You need to buy into our philosophy. In other words, what we do has to be aligning with what you want money managers to do for you. And number three, unlike a relationship with other firms, this one comes with homework. Several times a year, 3 or 4 times a year, I write very long letters to clients. And these letters are not lengthy just so I can kill a lot of trees. In these letters, I discuss in great detail our portfolios. And we bought this stock, here's why we bought it. We sold this stock, here's why we sold it. Here's what we think about this company, etc. Because what I found is this: unlike another investment firms, the advisor, portfolio manager, spends a lot of time talking to clients. And there's nothing wrong with that, except when you do that, that's the time that takes you away from research. So what happens in a lot of other firms, people that have a portfolio management title, they really don't manage portfolios. Either they do selling all the time or customer service, or they just buy mutual funds. Well, when you buy mutual funds, you don't have to make decisions because you outsource it to somebody else, except now you have 2 layers of fees, because you charge a management fee and mutual funds charge management fees. Therefore, I make clients and prospects basically. So when people come to us, I spend almost no time talking to prospects because we have somebody else who do that. And then I give our clients literal and figurative call option. I can tell them they can call me anytime. And then what I'm going to try to do, I'm going to work very hard that they don't have a need to call me. And the way I do this, not because I don't answer the phone, because I'm going to write these letters that's going to answer the questions they have about the portfolio, that they don't have a need to call me. And by doing this, I can actually focus on research. This is why I can spend 80% of my time analyzing companies and doing research and not doing customer service or not doing selling. So the question is, why not everybody is good for IMA? Well, because not everybody wants what we have to offer. Some people want their hands to be held. They want to, we don't do this. However, I say this, in the early days of pandemic, we were faced this something we haven't faced in 100 years. I basically wrote to clients, I think twice a week, for as long as I needed to. I forget, 3 or 4 weeks. Because at that time, I was basically making decisions kind of in the mid-flight. And I wanted my clients to sleep well at night. And I think that made a huge difference for clients. So I wasn't holding their hands in a sense like on one-on-one basis, but I think my ability to communicate clearly made a huge difference. The clients have to be comfortable with our way of communication. The philosophical alignment is extremely important. We had a situation, and I wrote a letter. It's called "Why IMA is Not for Everyone," which we're going to link to in the notes. Here's what happened. We had a new client who came to us maybe 2 or 3 or 4 months before. And he writes me a letter asking, Vitaliy, why is, and I forget the numbers now, but why is our portfolio is up 3% over this 3 months period and S&P 500 is up 7%? And I was so surprised by this letter because this letter is not written by a person who buys into our philosophy, because I'm buying businesses. When we buy stocks, we're buying businesses. And the market goes in and prices them every day. And how market decides to price our businesses or stocks in 2 or 3 months period, it's completely random. And then this person actually bragged that he checks portfolio daily. That is a very common mistake. It doesn't mean that he should not be a client based on this. But I would argue that I tell my clients that the best thing you can do is actually look at your portfolio on a quarterly basis or maybe every 6 months. Because when you look on a daily basis, all you see is noise, and that noise actually is harmful. Because let's say you had $100,000 and it went to 950 and went back to 100,000, the value of your portfolio hasn't changed. But that decrease of 5% and then that 6% increase to make it up, that actually, the pain of the decrease was greater than the pleasure received from the gain of that, that when you get that $5,000 back. So you actually become a net negative at the end if you look at your portfolio. So I told this client that it would be better for him, and I tell my clients this all the time, not to look at your portfolio on a daily basis. I basically explained to him in that letter, maybe we made a mistake, and maybe it's better for us to part while we are still making the money, because we can't, I'm not trying to compete with S&P 500, especially not over 3 months basis. I'm trying to build a firm because of good returns, provides great customer service, and has clients who want to be in this firm. And I don't want to have the biggest firm. I want us to do great research, provide great customer service. That means that not every client is going to be a good fit for us, and I'm absolutely fine with that. Hey, thank you for watching this video. If you want to learn more about life, classical music, philosophy, and investing, make sure to subscribe to my articles and visit investor.fm. Thank you.